The great aim of education is not knowledge, but action. Herbert Spencer. My friends, that's what we are training you for each and every day, 10 to 15 minutes. Practice trading, learning how to follow these charts. What a crazy day. I've never seen anything like this. Stocks rebounded. The index on the S&P 500 up 10.50%. The NASDAQ 100 up 12% in a day. 20-year U.S. government bonds, they ended up at the end of the day up 0.60%. Gold up 3.70%. Remember how we had a red spinning top here? Well, it looks like it's a green doji now on the weekly chart. And HODL up a whopping 7%. But again, nothing beating the NASDAQ. 12%. My word, that is completely and utterly insane. And as we look at the charts, you can see things heading down in the morning, and then bam, when Trump says he is pausing the tariffs for 90 days, whoop, the market was looking for something to move up. But my friends, the real question is, where does that leave us? Will that exuberance cause the market to just fly up forever? Well, again, it's exciting to see for a day. It may hang on for a day, but those of you who've taken our training previously on news trades, what do news trades mean? In fact, if you haven't taken it in a while, maybe you vaguely remember it. I'm going to put it at the end of today's video. I want you to listen to it. It'll give you a lot of clues. And here's a little hint. News trades are not typically that long-lived. Look at our charts. Let's just, divorce ourselves from this crazy candle in the 195-minute chart. That is the second half of the day on Wednesday. Look at where we've come from, okay? Starting back in January, late January, we were bumping up for many weeks, 5 weeks altogether. We were sliding along, hitting this high, and hit it like 3 different times just about, and then 3 different weeks, almost 4 or 5 weeks, but again, right up around there. Then we saw that first red down candle the week beginning the 24th of February. Down strong for 3 weeks, slid sideways for 2 weeks, and then down again. Now again, these last 2 weeks, that's what we're seeing with, of course, what? You can see it happen on the half-day chart starting on the morning of Thursday, the 3rd of April, where things really hammered down. We had a pop-up on Tuesday in the morning and then back down Tuesday afternoon and Wednesday morning, and then popping up strong on Wednesday afternoon. But again, we were in a downtrend already. Now, can it recover some of this craziness over the next week or two? Or if it keeps going up 10% a day in the next couple of days? Yeah, it could. It could. It very well could. But we were already in a downtrend for other reasons, were we not? So I'm not holding my breath that this is a market recovery. This is a short-term blip right now. We'll see. Is it going to turn the whole market around and all this exuberance with still the fact that Trump could go back to the tariffs in 90 days? And who's going to trust whether that happens or not, or this was all just some type of negotiation exercise that Trump is known for? So again, lots of indecision, questioning things going on in the market. The overall economy has those headwinds. I'm a betting man. In fact, I joke about not betting all the time in the market. But as I look at probabilities and statistics, I am thinking that this market is, again, we may see a short-term recovery, but I'm going to still be hanging by thinking, hey, the negative could be coming back when it comes to stocks. So let me tell you where we are with our directional probability even after this afternoon. We are still bearish directional probability. And this is really interesting. I'm looking at the S&P and looking at our historic back look at patterns. When we look at the S&P, Bearish entries after 3+ red candles on the 195-minute chart succeeded 78% of the time with an average move of $20 to $25. We are still bearish, 75% directional probability. Now again, I know we're in completely uncharted territory with this kind of crazy gain for the day. I'm just telling you that as we do the math and we look back and we do our calculations, we've got a 78% back test accuracy of continued down moves. Now, is that going to happen? Are we going to see the red down candles with the volume that's going to get us in? We could. We could. It could be a few days till that happens. And in these uncertain markets with this craziness, I'm going to be playing my cards very close to the vest. But again, this is the kind of time where it can be very dangerous jumping in the markets. If you are practice trading, I encourage you, to again, make calculated decisions, make them based upon what you see happening in the charts and see how well you can do. Learn how to stop your losses. Learn how to set your profit and loss bands. And again, follow those rules. The good thing about these kinds of times is you get the ability to see things you've not seen before and to practice stuff that you can use in the future. Let's move on to the Qs. Now, this is interesting. Similar bearish setups succeeded 75% of the time. That is bearish entries after 3+ candles on the 195-minute chart. It was 78% of the time on the S&P, at 75% of the time on the Qs, with an average move of $20 to $25. Now, of course, strong red down candle still there. Green spinning top on the 2-day with volume on the first day already above the average. And of course, we can see down in the morning and then slamming up with all that crazy volume in the afternoon to 12%. 70% directional probability bearish move. $23 to $24 on both the S&P and the NASDAQ, and a 75% back test accuracy. Let's move on to bonds. Bonds up 0.59%. And again, we saw bonds, with a red down candle forming. Now we got a super long wick on the bottom. You can see where bonds down in the morning, popping up in the afternoon. These are Heiken Ashi candlesticks, so it's hard to tell. But look at all that volume. Look at the volume on the first day. Of course, it is a down candle still because of the Heiken Ashi calculations. And if you've not taken our training on Heiken Ashi candlesticks, you really need to do so. Over the last few days, I've been sending out all sorts of trainings in your show notes. If you're not signed up at chartingwealth.com, you need to be. I've sent you a chapter from the book. I've sent you 2 or 3 different trainings on volume, on Heiken Ashi candlesticks and volume, on just Heiken Ashi candlesticks. So very important for you to have. So again, subscribe at chartingwealth.com. You get the email every day. Plus you get the grid that I'm using, the trade execution summary grid I'm using right now, and the numbers I'm giving you. You don't have to write them down. You get them in your email every day, but only if you subscribe. It's free. That list is never sold, never spam. So sign up. So where we are again on bonds still quite negative. We are just basically neutral as far as bonds go at this point. 55% bullish, which is again a coin toss. Your entry point's around $87, a little bit lower than where it is now, about a $1.44 move seen up over the next 5+ days, 60% back test accuracy. I'm not pulling on the trigger on anything that low. I like 75, 80, 85% when I'm looking at something. And again, these crazy times make you even more zealous and more careful. Remember, first rule of trading, don't lose money. Second rule of trading, don't lose money. Third rule of trading, make money. Let's go to gold. Gold, gold up nicely, 3.70%. Remember yesterday when we had a red down candle? It was a red spinning top, a wick on top and bottom. Now we have a doji. Look at that volume. We're just at Wednesday, my friends. And the volume's almost as high as it was last week, which was super high, higher than we've seen in a year more. Crazy move. In fact, it is higher than we've seen in over a year. Just the volume from last week. And then things moving over and through that strong trend line. We dipped through it on the last two-day candles, this latest one trying to push up through it. We can see those half-day candles sitting right there below it. We'll see what gold does tomorrow. We are bearish, 65%. Entry point is 284.23. We see a $4.50 move over the next 5+ days, 70% back test accuracy. So again, watch for a potential bullish pullback that you might be able to ride in gold. Now, lastly, we'll look at Bitcoin. Bitcoin slamming up 7.09%. We are slightly bullish, just at 60% on Bitcoin. I again have cautioned you all after all these weeks of down moves. Last 3 weeks sideways move, and then this week started to tip over. We can see at the end of the day where things jammed up on Bitcoin, but still well below the weekly trend line. Again, not all that much of a trend line, not really hammering down, but so is the 2-day, and we got a red spinning top there. And again, keep your eye, but look at the volume on the weekly. High volume last week with that red spinning top, lots of indecision, and then starting the week off moving down and then trying to recover some on Wednesday afternoon. So we'll keep an eye on Bitcoin. We've got a 65% back test accuracy. The move we look at is about 81 cents. So again, not good enough for my money when it comes to those percentages. So keep your eye on things. I'm not thinking the markets are totally recovered just because Trump has said he's given them 90 days. We were already in strong down moves, particularly in stocks, but we will keep our eye on things. Maybe that exuberance will get back into the market. Market loves exuberance. It also loves panic. It loves greed. It loves fear. And we shall wait, watch, and see. Use these charts to help us chart our course in the future. We always love to hear from you. Don't hesitate to reach out to us. cw@chartingwealth.com. Be sure to like this video and subscribe if you appreciate what we do for you each and every day for free.